Well, what is going on, guys, and welcome into the video. Well, we have the CPI release coming tomorrow, and it could just be a disaster. I mean, just one factor alone may make the number ugly and just obliterate the market. So let's discuss that today and exactly how to handle this possible destruction in your stocks. I just ask in exchange that you hit that like button and actually do it for all the creators that you like and support. Seriously, I'll wait until you guys do it. I'll give you time here. Hang on. Okay, what if I show you this? Now will you press the button? All right, moving on. So everyone outside of this guy knew that inflation was coming, and man, did it hit hard. And as you can see right here, it has just continued to march up until March and then kind of somewhat level off for the past 3 months or so. But we saw that exact show happen before. I mean, we saw it hover around 5% for 5 months last summer before it started to march back up from there to over 8%. So I don't think anyone trusts that the past 3 months of data is kind of the inflection point we need to reverse the trend. Now, oh, slow down. It could absolutely be the start of the inflection point, and inflation is indeed moving down. But given that the Fed just now started getting aggressive with rate hikes at the last meeting, and those hikes typically take months and sometimes even longer to show up in the inflation data, I don't think the rate hikes have had the effect yet to stave off inflation, so we could actually see it continue to march up until the hikes actually start to take effect. Now, I absolutely see the flip side of this argument as well. I mean, we've seen gas prices fall now for a few weeks finally, and that has been a big driver of the overall CPI numbers. And that absolutely will help if it continues to trend down, but it only trended down towards the end of June after hitting record highs earlier in the month. And remember, this is June's data, so the little bit of relief we are seeing right now at the pump probably is not accounted for in these numbers. Add in the fact that rent has continued to trend up, not as aggressive as it was before, but it's still trending up along with food remaining elevated, and it seems like there's always something shocking and random that pops up and pops a big number too. I mean, it started out with used cars and it's just kind of moved to all kinds of wild things, but the point is there will probably be another shockingly high number that will not help the data at all. You know, like chew toys for dogs or something random like that. I mean, they track all kinds of random things. It's actually kind of funny when you actually read through the entire report. So really, there are 3 scenarios that I think will play out, and I will discuss what I am doing specifically in each one of those scenarios. And let's start with the positive one first, and that is that we see it stay the same or even inflect down just a little bit. Now, hopefully not too much, because all that will do is have everyone not believe the numbers at all and just kind of create more conspiracy-driven narratives around all this and everything else that's going on. But if we get this, I expect the rally to kind of continue for at least a day or two until the banks report and give their take on inflation, the economy, and all that good stuff like that, because I just honestly think Wall Street is almost more interested in that than the CPI numbers, unless the CPI numbers are just ugly, and we will get to that here in just a second. In this scenario, I will continue to buy stocks as they hit my price targets and continue my modified DCA that I've been doing throughout this downturn. There probably won't be too many rocket ships, but some have rallied to a point where I've actually had to stop buying, but others are still struggling, and it seems to be a different stock every week that kind of falls into my buy range, so I will continue to be kind of a slow buyer of stocks. But the second scenario is we see it elevated more, but still stay under or right at that kind of 9% number. And if that is the case, Wall Street will continue with this odd kind of stagnant trading, and then earnings season is going to take over and will drive the markets from there forward, and Wall Street honestly won't care about CPI or anything else until the FOMC meeting at the end of the month. But this would solidify another 75 basis point at a minimum, maybe a quarter point more than that at max interest rate rise. The market hates uncertainty, and at least this would give some clarity on what the most probable outcome for the Fed is, meaning that they will be raising and Wall Street will focus on earnings unless the Fed just shocks us, but let's just not even go down that rabbit hole here. And in this case, my strategy is exactly the same as the first scenario. I would just continue executing buys at my price targets. And lastly, we kind of have the disaster or the worst scenario, or however the heck you want to call it. Basically, where inflation comes in hot, like well over 9%, you know, kind of at that 9.4, 9.5 range, or God forbid, even higher than that. And if that happens, the market will not wait to sell off completely. They will immediately start to sell stocks, because we all know that not only will the Fed be aggressive at the end of the month, they might either be more aggressive at that meeting than the expected 1% max hike, or they may even call a session before that one to announce a rate hike even earlier than the originally scheduled meeting. So basically it means we get 2 rate hikes this month instead of 1, and 2 big hikes most likely. Either way, this is going to induce panic into the markets. I mean, probably not as bad as the media YouTube will make it out to be, but it will create big selling pressure in the markets once again. And in this case, I will do exactly 2 things. 1, I will still be buying, But I'm going to be a touch more patient, as when you have big fear events like this, the VIX will spike and the sell-off will last much longer than a day. In this case, waiting a day or two, or even more to be honest, will bring more stocks not only into my target ranges, but into the lower parts of those ranges, so maybe even into that stupid low territory that we get from time to time. In that scenario right there, I will buy as much of the fear as I can get during that time frame. This is where having patience allowed you to not buy this latest rally, but instead you were pulling as much cash as possible for an opportunity like this. And this is exactly what we preach in our group, basically doing evaluations, setting price targets, buying the fear, and being patient and saving and working to put away cash for the next opportunity when the market actually rallies a little bit. I watch people all day long, and myself honestly, jumping in and helping out members with all of that. And yes, even FOMO in this market. Can anyone say Palantir after its latest FOMO-inducing run? I mean, good grief. That stock ran up fast from $6. And you too can get that level of support by joining the group using the link in the description or the pinned comment, and check out the 4 free courses that you get with it. We have live streams with me. I put out several videos a week I cannot put out here on YouTube. Or you can just slide in my DMs as you have full access to me. So check out the pinned comment if you're interested. But let me be very clear. I have been buying during this rally, just not as much as I will be if this number is bad. I mean, a few stocks have made new 52-week lows that I've been targeting, and so I bought them during this latest little rally that we've had. And if Wall Street wants to get stupid again and, YouTube is blowing up and, oh my gosh, the end is here and all this other crap like that, please let them do that. The average bear market doesn't last more than a year at max, and we are well into that now, and by the time it flips and the numbers look good and you have confirmation that the bear market is over, we are in the middle of the next bull run. So I will not let opportunities pass me by waiting for this indicator or that indicator or anything else like that. Just like during the financial crisis, I will be buying these arrows that you see here on this chart. I love this chart because nobody can time the bottom perfectly, despite the fact everybody nowadays seems to know exactly where that little bottom circle is. Hate to burst the bubble here on YouTube and in the media of all those smart folks out there, but there is no indicator or formula that tells you when that is, so it's useless to even try to time that event. All you can tell is when something is undervalued or not, and in this market right now, many stocks are not just undervalued, but some are going to get stupid undervalued during this time frame. So with the right plan and the right discipline, you are in a win-win position as a long-term investor, no matter what the Fed does and no matter what the inflation numbers come into. And don't forget to sign up for the group using the pinned comment if you want a step-by-step process to doing all this and you want to walk with myself and others as we navigate this downturn together. And click this video here if you want to see what I'm selling in this market, and click this video here if you want to know exactly how I plan to make big money in this market. So thanks for watching, and we'll see you in the next one.